All right, Spotify will make its Wall Street debut Tuesday without the protections of a standard IPO. The music streaming service is offering shares through what's called a direct listing on the New York Stock Exchange. So what can investors expect? Joining me now is Santosh, head of research at Manhattan Venture Partners. It's great to see you, Santosh.
Good morning. Thanks for having me.
Welcome to the show. I know that you have been covering Spotify for years. This is the first time a direct listing has been attempted on such a large scale. So what can we expect tomorrow? A lot of volatility?
Yes, a lot of volatility is going to happen, but I think Spotify is a different story. They have been very active in the secondary market, so the price discovery is not going to be that difficult. So they've been disclosing their financials for the last few years because of the European domiciled entity. So we know where they're coming from, we know where they're going, so the transparency is very good. And so I think in that sense, the people who'll get in, and the company is not guiding to anything, so there is nothing to beat, there's no benchmark to beat as such. So I think it's just going to be out there. Everyone can sell. Whoever wants to sell, anyone can buy. So that pressure is not there. So I think in a typical IPO, you have all those ranges and all that they have to beat, and then you have it's a good or bad. There's a marker right there. But in this case, it's open-ended. So people who really like the story will get in, and people who don't like won't get in. So the transparency is going to be very good.
And you think that pricing will be stabilized because they don't have big underwriters there to sort of make the market for them in this direct listing?
Right. I mean, we know where they've been trading, where the stocks have been trading based on some fundamentals.
Which is about where?
Anywhere from 90 to 150 over the weekend.
That's
I heard.
Quite a range.
Right. 90 to 130 is more realistic, but we heard some trades went off at 150, so we don't know. It's still unconfirmed. But the range is pretty wide because they're strong bulls. This is a best-of-breed streaming company coming to market at scale. The revenues are growing at 30%. The compounded growth rate is 30%, just like Netflix is, the two-year compounded growth. So the numbers are very good. The top-line user growth is pretty good. So I think that's what, in a consumer-facing internet company, that's what you want. You want user growth, you want revenue growth, and this company is delivering on that.
But they have a lot of costs, and they have lots of lawsuits that they're facing because of their low royalty payments that the music industry is saying that they're paying. So is that something investors should be concerned with?
No, I think that's par for the course. In any royalty case, you're going to have these fights, and I think the company is going to fight it out. And they've been doing that in the courts, and they've been winning also. So I think they've been very fair. They've been paying the artists, they've been paying the labels. So I think in that sense, there is no discrepancy. There was for a while, in 2 years back, maybe there was some discrepancy, but I think they've worked it out. They have a good relationship with the labels, good relationship with the artists, and they all want to come on the platform.
You know, there's a saying, as Spotify goes, so goes the music industry. How important is this market debut for the music labels?
I think it's very important. It's very critical. And I think this is where, this is the future. I mean, this is the platform to be. This is the go-to place for artists right now. The others are coming up, Apple Music, Amazon, Google, they're there. But they're playing catch-up at this point, and Spotify is the leader. It's their market share to lose at this point, and I think as long as they execute, which they have been doing, I think they can maintain the leadership.
Will the success of Spotify's, or failure of Spotify's direct listing sort of pave the way for other unicorns like Airbnb and Uber? Are they looking at this as sort of the litmus test to say, I don't know, maybe direct listing is the path for us?
Yes, I think this is going to be a big tell on the way. Spotify has really appended the whole IPO playbook. Yeah. And if this works, it's going to be great. But I think it's slightly different. In this case, they've been disclosing numbers. Like I said, it's been a very efficient secondary market for this company. So the price discovery is much easier. Airbnb and Uber, we'll have to see how they play out. And if this works out smoothly, I think it's not a bad option for them to go.
You know, the company is not going to deal with all the pomp and circumstance tomorrow. They're not going to be ringing the opening bell or the closing bell. They don't want any part of it. Do you believe that this direct listing sort of democratizes the IPO process?
Right. That's the end goal for the company. That's what they've said. And I think that's great. And they're coming to market. They're saying, hey, this is who we are. We're not playing any stock games with you. No banking games. This is who we are. This is our revenue. This is our users. This is where we think we're going. So I think that's pretty straightforward. I think in that sense, it's very open book. And I think that's good for IPO.
Full disclosure, Manhattan Venture Partners has some of the shares on the secondary market?
Yes, we are actively trading that because our company believes in capturing the alpha before it hits the market. So it's a pretty good business model. And we follow the companies across the board, Airbnb, Uber, Lyft, across the board. And it's very actively traded on our platform. So we follow that.